All right, what's up, traders? Welcome back to the channel. We're going to take a look at Bitcoin. We're going to talk about a few things that are happening this week, what we're kind of looking for. We're going to dissect the dollar markets. We're going to dissect a few, things that a lot of people are looking at here, like options, open interest, and a few things to kind of help give us a bias. As of right now, Bitcoin is currently testing resistance. We're trading above the strategy cost basis, which has been acting like resistance in the past. You also have a massive call wall up at $80,000. There's a put wall down at 60. It's pretty much just range bound here. The dollar is still range bound. I think that is kind of what we're seeing happen here. We need the dollar to make a move so that way we can get a move on Bitcoin. It looked like it was going to try to do a breakout above the March high, which was at the MicroStrategy cost basis, and then we were potentially going to see upside continuation. It looks like we're still doing that. We are testing right now current day and 3-day open, which could end up being support. The dollar is also at a very pivotal level, and it is currently testing it's currently testing the yearly opening range. So if I put this on a 4-hour, you can see exactly what's going on here this week. Though last week we traded down here all week. We got down here pretty early, and then for the rest of the week we just chopped around this level. This long-term dotted green trend line is essentially holding the dollar from breaking down. We've been under it, we've closed the month under it, but then it shot back up to the August highs. We've pulled back off those August highs since then, closed 2 weeks successively under the 21 exponential, and kind of just range bound here. Now, one thing that happened over the weekend was obviously Iran has closed down the Strait of Hormuz once again. Though as long as the US is meddling in the Middle East, there is headline risk. So literally you can have a fantastic technical setup, and then a news article can pop up out of nowhere, and then boom, that setup is collapsed. Though in these times, it is very vitally important that you guys are mitigating your risks, because news is always going to trump a technical setup. But with that being said, the dollar looked like it was going to try to break down yesterday. I do not like that we're right back here again today. Today is Tuesday. It's early in the week. We have seen in the past where, some assets could potentially set the weekly range on Tuesday. So either we have a weekly low potentially in, or it's looking to set a weekly high. Unfortunately, you've already done that. You already have a weekly high that was put in yesterday and a weekly low. So you're trading inside yesterday's range. Not really a lot to go on here. The main level that we're focusing on is the yearly opening range. The DXY also has a quite large gap to the upside that was not filled when it broke down. So essentially, I feel like we generally don't focus on gaps in this community, because we know that gaps don't have to fill. There are unfilled gaps all over the market that will never ever be filled. So we don't put too much weight on them. But whenever price is this close to a large one and showing signs of continuation or the lack thereof, we tend to think that maybe there's a slight like a magnetic reaction happening to the gap. We don't know. So essentially what we're going to do is we're just going to watch the yearly opening range, and then if the dollar trades to the upside in the direction of gap fill, we will have more of a near-term bearish bias on Bitcoin, and look for risk markets to essentially pull back a little bit from that meteoric 3-week rise that they had, massively overbought and all that stuff. So yeah, if the dollar decides that it wants to trade away from the yearly opening range and set a fresh weekly low today, then we're going to have more of a bullish bias. So unfortunately, that puts us on both sides of the market today, which is pretty much a norm at this point because the dollar is so range bound. We need the dollar to break out above the August of 2025's high, which is Q4's high. Well, you have a new high in 2026, but it's still Q4 of last year's high. that is the breakout point. If it could break out above that, it could set a macro trend that could last for a month or two to the upside as it breaks out and, stops a lot of wrong side traders. But it's the same way to the downside, right? If we could get a very good breakdown, then we could see a trending move to the downside. So I think the dollar is kind of hemming and hawing here, keeping Bitcoin locked up. Now, we are seeing massive supply shocks happening on Bitcoin in the form of strategy and the STRC product, as Michael Saylor is still continuing to buy Bitcoin. He has shifted his focus a little bit. He's not so much a Bitcoin maxi anymore, and he's going to start acting like, why buy Bitcoin when you can buy my product? It takes the volatility out of Bitcoin and this and that. Well, that's what everybody wants to buy Bitcoin for. They want to participate in massive upside rallies. So if you go the route of STRC, it's just to generate a yield. The yield is fine. I am going to talk to my guy about it in the next couple of days. I've already let him be aware that I am looking to come into the office, and he's totally fine with that. We're going to discuss tax implications and things, and if I do deploy capital to STRC, it will not be a small amount. It will be, quite a large amount. I will let you know. I will absolutely let you know. There are things that I want to have him look through in terms of legal implications and a lot of other things. But if he gives me the go ahead and says that, it's fine, right? Because I already have a significant portion of my capital in Bitcoin. So in cold storage. Essentially, we're just looking for day trade scalps generally when we're doing the live streams, but we will talk about the macro, larger time frame picture. So Michael Saylor is essentially locking up the supply in this asset. You also have the top five money manager companies out there, BlackRock, Goldman Sachs, you know who they are, right? Big money, are all aiming at having products aimed directly at Bitcoin. The new Goldman Sachs ETF is going to focus on a call selling strategy that is also going to extract volatility out of Bitcoin. So in a sense, Bitcoin's volatility will shrink over time. It has been going down over time, which is a good thing. You're going to have legit money into this thing. I don't expect it's going to collapse, barring a black swan event. But there are technical levels that we're going to discuss on the long term. If you are looking for the dollar to collapse here, if you think that the dollar is going to find resistance here today and it's going to roll over, then you would be interested in putting in a position on Bitcoin to the upside. I don't like that trade because it's real early into the week. You really haven't done much this week. Yesterday was a very, very slow and very sideways day. You did get an upside rip. So that was good, but you didn't go very far. So, in a sense, you've made a fresh weekly high. I never like to see that, a fresh weekly high get made on Tuesday and then see price roll over and head back lower. I generally want to see Bitcoin ripping. Now that we've gotten above, prior month swing highs, I want to see bullish pressure similar to what we saw on the S&P. I want to see a short squeeze happening. Since that isn't taking place, it kind of puts people on their back feet and a little bit defensive essentially, I think Bitcoin's going to rally. But anyways, the things that we're looking at, OBS is doing its thing. I don't know what's going on here. But anyways, sorry if you were disconnected. I'm back up. But internet's good. I've already ran tests. We're all good to go. Farcoin is the thing that we looked at for the short today because the deltas are bearish and we're testing 3-day resistance. Essentially, if you go out to the 3-day time frame, you can see right here, you've not been able to close a 3-day candle above that. You made a fresh high, came off of February's open. This looks like a rejection. So as long as we're trading under this price right here, we're going to look for the short, for the dollar breakout, if you will, on Farcoin. All right. In terms of the weekly VWAP, you're bullish. So this pullback could get bought. In terms of the monthly range, you are bullish, right? Generally, whenever something is bullish like this, I don't want to be looking for shorts. But because the dollar is threatening a run back up to gap fill, we understand that could cause this week to pull back on Bitcoin and crypto, right? So that's what we're looking at. In terms of oil on XBR, Brent crude specifically, this is going to be the perpetual swap futures contract. This is what we trade now. You are under the weekly open, but looking like you want to retest that. Oil has a more bearish structure on the near term, not on the long term. Obviously, on the long term, oil is going to be registering as very, very bullish. But on the near term, you are under the 4-hour 200. You are trending lower. You have had several breakdowns. So it does look like it wants to head lower, but the headline risk is keeping it popped up or making insignificant lows here. This is occasionally looked at as a Wyckoff accumulation formation. When you make these insignificant lows, it's called a 3-drive pattern. You can have them both to the upside and to the downside. Since this one is occurring on the lows, it's forming a wedge, right? That's all it literally is. It's just a wedging formation. You're not really seeing a big trending move take place yet. I think if they get the straight open and get a deal worked out and all that good stuff, as long as all the surrounding nations get their petroleums back on and back to doing normal things, I think oil does ultimately slowly trend back down. But being the risks as they are right now, I would say oil for the long term, at least a couple months, probably going to be back and forth between $180. But anyways, for the trade today, you are testing or close to testing the weekly open. It would be very, very simple to mitigate risk on this trade. If you're above 91.23, you do not really want to hold a short because the 200 is slightly extended away from the 21. Prices could be looking to close that gap, if you will, make the averages more tight, then trend, right? That could be what we see here. But if you're trading under it, you could hold a short if you have a downside bias on oil. If you're bullish on oil, I don't really have it set up for you today. I mean, obviously, you could try to buy here. You know what I mean? It's making higher lows on the very near term. But it's in terms of a bullish setup, I don't like it. Weekly open is above. So that generally means, like, you know, since the week has opened, price has trended lower. It's not been a big trend. It hasn't been a trend at all. It's literally sideways, but you get what I mean. Like, yeah, you could be setting the weekly low, but I mean, support is all the way down here. So there just really isn't a setup to get long right here, right now. You could try, obviously you could try, but I just don't know how that's going to work out. So I like Fartcoin for the short, and only if it is rejecting yesterday's high. So that's the trade that I'm focused on mostly here today. I do not like the technical setup for a short. I do not like that it's above the weekly VWAP. I do not like that it is trending higher. I do not like that the April range is higher. I just don't like the idea of the short. But because the deltas are more bearish here, and they have been for the last few days, I have to look at that as a potential rejection and be short. So as long as we're trading under yesterday's high, I can be short. If it's trading above yesterday's high, then it is currently breaking out, and I have no idea where the high will be. So I can't really be short. So that's the trade right there. If you get it when the bell rings, if you get a push back up into 0.2061 and a rejection from there, that is where you would be looking to put your risk on. Stop loss would be high of day, which was made, you know, on the previous 4-hour candle. If we pull up this 4-hour structure, technically, it's still okay. It's not like it's not uber bearish, right? On the 4-hour, you're actually bullish. On the 8-hour, though, you could look at this as a failure, right? Because you have the 200 right here underpriced. The 21 is just above it. This whole thing could be a trap. So all of this bullish pressure could be a trap. So if we get the breakdown back under the daily 21 exponential moving average today on Fartcoin, then I would definitely want to be holding shorts, as we are near the top of the monthly range, as we could look for an April open retest. looking at the entire month of April, right? Looking at the entire month of April, you don't really see that bid pressure on the deltas, not like you do on Bitcoin. So essentially all I mean by that is if you were to, like, you know, you could just simply see that there is more red and trending red than there is green and trending green, right? So that's showing you that there really isn't a whole lot of aggressive buying taking place in this asset. This asset is literally a meme token. It has zero use case whatsoever. It has decent liquidities and decent volumes because traders use it to generate an income. So it's a good trading asset, but in terms of use case and value, there is none. It is obsolete, ridiculous. It has zero value. Though I would rather be short something like that than Bitcoin, as Bitcoin does have a use case. It does have value. People are invested in it for a reason, right? Now, there is no actual objective thing that you can say, go to the store and buy and call it a Bitcoin. I get that, but it is an objective financial product. And people are, whether you like it or not, they are building these financial mechanisms to where Bitcoin is an absolute investment option. So, yeah, I mean, it is what it is. That's where the value is for Bitcoin, right? Because people want to protect their purchasing power. They understand inflation and all this stuff. So, boom, there it is. And the STRC product is an actual stock. It is just as risky as any other stock. There is nothing that you can invest in with a 100% guarantee. If you want to, like the video that what's his name made the other day, I like that guy. We need that guy. That guy highlights frauds when there's obvious frauds. To call STRC a fraud, damn, bro. I mean, he didn't actually do that because obviously there's a lawsuit implication there. You have zero proof of the fraud. You cannot just outright do stuff like that and get away with it. But he compared it to frauds, right? He compared it to a shitcoin. He compared it to something that has no value. Understand that STRC, though it is an investment, it is a stock. You are buying shares of the company. You are not, your money is gone. That is correct. But that is the same way when you invest in any index product. The only thing that guarantees you your money is safe is a bank, right? And that's only if they get robbed. If they go bankrupt, your money is gone. Maybe the federal government kicks in and gives you back whatever the FDIC is at that point in time. But, like, you know, you get what I'm saying. All investments are risky. Michael Saylor's strategy, or STRC product specifically, is backed by Bitcoin. Bitcoin could go to zero for the next 10 years, head to zero, only print lower highs and lower lows for the next like 40 years. And he would still be able to make his redemptions or make the payments on what he has promised. Now, obviously 11% would be dropped if Bitcoin quit making returns. But the last 10 years, Bitcoin has done 60% year over year. All he needs to be profitable is 2% to the good. So Bitcoin literally just needs to get above the early opening range by 2% and they're in profit. That's, yeah, not bad. Not bad. So there is backing. I would argue that there's just as much, if not more, backing than the US dollar has. Obviously, the dollar has a military backing it, but in terms of gold or another financial product, no, there's nothing. It's the government's word. At least with STRC, there is physical backing. There is physical backing. You can do the due diligence. Everything is right there. Everything. All the legal paperwork. I mean, all the legal mumbo jumbo. All of it. You can get all of it for free. It's right on the website. Is it dangerous? Yeah. But it is when you buy any stock. You can buy it at $100. If something were to magic or tragically happen and STRC were to go down, you would simply just close the position by selling into the market and you will get the next best price. That's how all markets work. Every one of them. All of them. even money markets, even yields, treasury yields, all of it. You can only sell it if there's a buyer on the other side. STRC is a very liquid product. 500 million in one day. Like, you're definitely going to be fine. As long as you're not trying to close it like $1 billion position, you're going to be just fine. Very liquid, all that. I am very interested in putting some money to work in it because it is a very juicy yield. But I want to make sure that, that all's good on. I just want to make sure that my guy takes a look and understands all of the risks. I am a trader. He helps me, do the legal stuff. But anyways, I'll let you know when or if I'm going to get involved. And we'll probably do it live. I mean, I don't have a problem with that. But anyways, we'll see what Bitcoin wants to do here. Coming into potential support. All right, so while we're waiting on the open and while we're waiting to see what Bitcoin wants to do here with the dollar, let's go ahead and discuss the open interest because I think it's pretty. The options open interest there's an objective wall here. You've got a call wall setting at $80,000, and then, like I said earlier, you have a put wall setting at 60. That's literally just the range that it's been trading in for the last 3 months. We go over here. I already have it drawn out for you on this one. We'll pop out to the daily real quick. So that's essentially what it looks like, right? February's high is the technical level that we're waiting for Bitcoin to break out above, as that is the liquidity pinch point because it's the last highest high. I mean, that's how liquidity works. It sets above and below all swings, every one of them. Every swing high, every swing low. So February is the oldest one, the February high, that has not been liquidated yet. Though, of course, that is where the liquidity pinch point is. In terms of a monthly candle, after that, the very next liquidity pinch point is all the way back up to almost the 100K big figure number. So it is empirical that Bitcoin gets above the February high, and to start showing us bullish pressure above that for the short squeeze to even be on. So in my opinion, subjectively, this is where the short squeeze begins. I assumed it would be at Strategy's cost basis, and clearly that is not what is happening. As you can see here, we got above it right here back in March, at the beginning of March. Then we liquidated it, made a fresh high, and then boom, broke out. This looks like a rejection. And now you're currently trading above it, so that looks good, but the dollar is poised, you know what I mean? Like it could head back higher. So my long-term case is not that Bitcoin cannot make fresh lows. My long-term case, or my main case, is, I don't think that happens. It's my base case. I think Bitcoin probably does pull back again. As the longer it spends time in this range, the more and more people will start to, think that it's going back to down. And that would literally make so much emotional money be bearish Bitcoin. It wouldn't even be funny. And it would be the perfect ploy to buy into. So I'm a buyer on Bitcoin because I just think it's going much higher in the future. I have areas here for the longer term investors that you could look at in terms of what would be considered value, what would be considered cheap, and all that, going by the 200 simple moving average. And as you can see, all the way down at 35K would be considered cheap Bitcoin, in my opinion. I'd be a buyer all the way down there. All the way down there. I'd be buying it up. Buying. I'd probably be a big buyer on, like, if we got down and made fresh yearly lows, I would probably be a huge buyer at the fresh yearly low. But then I would be an even bigger buyer down here, and we'll see what happens. But I'm definitely adding to my portfolio, doing it over time. I think we're in a big area of fair value right now, so I've already started deploying capital to that cold storage. You don't want to be buying it when it's very expensive or expensive. if you want to participate in the rally. If you think it's going to zero, then there is no reason for you to even be looking to buy it, right? This is just for the people that are interested in buying and participating in a rally. All the bears are already bared up. They're bared up as good as they can get bared up, right? So we don't have to worry about them. This is for the buyers. There you go. You can take a screenshot at it and get those values. They're all highlighted over here if you want to get them. I've already done the work. All I'm doing is taking, a percent value higher and lower than the 200 week. It's not even an exponential. It's just a simple. Because that is typically where investors are going to deploy capital. If they're bullish an asset. And the asset proves that it can hold that area for a long time. We've been holding this area for now 3 months. Bitcoin has been basically getting crushed for a half a year, right? It's been a half a year now. So that's when it set the all-time highs back in October and rolled over. It's been, pretty much, there's only been a couple periods or a couple weeks of actual trend. We were in a long period range back then. We're doing the same thing now, essentially. So we'll see. I don't want you to try to be a buyer when it's ripping, because you're going to get, if you even want to, because it's going to be difficult to get positioned, right? Just look at what the SPY did. In terms of the NASDAQ and the S&P 500, because the bell rang a minute ago, just to let you know. I don't have my other platform pulled up, but anyways, yeah, in terms of why are we seeing that weakness, right? There is standard weakness as Bitcoin is not rallying and the S&P and NASDAQ are back at all-time highs. Yeah, I get that. We're literally 2 standard deviations under NASDAQ. So literally this is another huge buying point. Like when you're this low in terms of standard deviations away from where risk is trading, do you really, really think that there is way more of a short to gain here? You know what I mean? Like this thing is more than likely going to rally in the future. It is more than likely going to do this again, where it is going to be several standard deviations above where risk is trading. That's why people love Bitcoin. And because Saylor has locked up a huge portion of the supply, when retail FOMO begins back into Bitcoin, it will be too late. That is when smart money will be taking profits. If you want to get involved in upside, you need to be doing it soon. All right, so with all that being said, let's go take a look at oil real quick just to see what it's doing here on the near term. So you do still have bullish deltas in oil today. And let's go back over to Coinbase. We want to make sure that we stay focused on what's happening here today. Yeah, so there are a lot of things that are saying that if you want to be a buyer on Bitcoin, you really should think about, maybe not today, obviously. Do it slowly, do it small, do it over time. Don't worry about at what price you're buying, because the long-term hold is just that, a long-term hold. You're holding for 5 years plus. When Bitcoin starts to rip, it will rip hard and fast. I would actually love to see Bitcoin refuse to trade back under the strategy cost basis, because as long as you're under 75.5, the squeeze is still on, the Saylor squeeze. Because that's what people think is going to happen. Anybody that has a huge bearish case on Bitcoin, they're assuming that, Saylor is going to be the reason that Bitcoin goes to zero. And to be honest with you, if he were to get liquidated or whatever, then obviously that would cause massive selling pressure. Saylor is essentially absorbing all of the selling pressure from miners and retail right now. he has more than likely stopped the bear market all by himself. Let alone once Goldman Sachs is done building a position, BlackRock is continuously building position, or they've already built a position, but you also have, excuse me, we got the coffee hiccup / burps going on here. We have a new ticker. Morgan Stanley has an ETF. Like, there's just so many things right now that is happening. And then second, there was some concerns about like the banking risks, or not banking, but credit specifically. Banks reported earnings last week, and the non-accruing loans, or look for both consumer and commercial. Let me pull that chart up so you can see right here. So essentially, if credit, because private credit got annihilated, because they were overexposed to software. So it's very important that you understand why private credit is getting beat up right now. It's not getting beat up because there's a credit crisis, right? It's an overexposure problem, not a credit crisis. But anyways, for us to decide whether or not there is a credit crisis happening or not, because there was a credit crisis happened in the GFC, right? The great financial collapse of 2007 and 8. We can look, there's an indicator for that, this indicator specifically. So because the banks all reported the non-accrual loans, these are delinquent loans. This is both commercial and retail, right? It's individuals and commercials. You can see that it isn't getting, the numbers are from last year Q1 to Q4. They're going in the wrong direction, but it's not like a crisis. You're not seeing that massive default happening in terms of, JP Morgan, Wells, and Citi and Bank of America. All of these numbers look good. They look good. Not great, but I mean, they're fine. Like, they're a non-issue. And the banks all are doing great. We'll go look at their tickers here in a little bit, but they're all trading at highs. Like, they're doing great. They're making money. The loans are standard, normal almost. Like, the times I guess we live in now are conducive to what we see happening on the bank's balance sheet. We're not seeing a credit crisis. It's just an overexposure to software. Now, it's because software is eating AI's lunch. I mean, I said that backwards. AI is eating software's lunch. So the good software companies will pivot and figure out a way to use AI and this and that, and the bad companies will probably go under. Especially if it's just as simple as having Grok or someone else do the same code that you're paying them to do, right? Yeah, AI is going to destroy some of those. Some of those software companies will probably never come back, and then others will. I don't know which ones will and which ones won't. That's for the future to decide. Who pivots in the right way. Those companies will be just fine. Oh, in terms of ETFs inflows, we did see more ETF inflows last week also, more than we've seen all year. So that's a good sign too. We're seeing a lot of technical buy signals in terms of like macro buy signals. Some haven't quite got there. Like one that we used to look at a lot, the MVRVZ score. Like, you're still not in the green on that Glassnode ticker or that Glassnode chart just yet, but you're close. You're getting real close to deep value on that. But a lot of other major indicators are signaling that, not only are you close to cycle bottoms, but because there was so much momentum in the beginning of the year, you already hit oversold levels, which is something that has never happened before. A lot of people, like a lot of the bigger channels, I respect them. They have massive following. Benjamin Cohen, people like that, you know, millions. He's got 1 million subscribers on YouTube alone, 1 million that follows him on X. He's got a massive platform. He is still extremely bearish, and he's literally comparing midterm years back both through 2018 and 2022 bear markets, pretty much comparing this bear market with that bear market. Business cycles down. He is correct about that. Liquidity is down. He's correct about that as well. It is a midterm year. Yep, that's going to happen too. So yes, there are a lot of similarities in terms of what's happening on that scape. But in terms of where Bitcoin is in the cycle, you need to look at a momentum oscillator. And that's the one thing that I have not seen him compare to those previous cycles. And I wish he would, because it's very simple. You just plop up a weekly time frame with a weekly RSI, and you would see that in April in 2018 and in April in 2022, you were not oversold yet. So though you were like midway through the bear market cycle with momentum, Bitcoin has already hit oversold in this cycle, and oversold on the weekly time frame has 100% of the time. This time could be different, but 100% of the time went back to overbought. So it was the 4-year cycle low, and it was the momentum cycle low. So that's what I want people to understand, that these cycles are not the same. In terms of 4-year cycle and momentum, they're not the same. They cannot be compared. Totally different things have happened. The macro is also nothing like it was back then. Obviously in 2022, we were fighting skyrocketing inflation. You were at 9% on the CPI in April of 2022, I think, or close to it. Much different things happening in April of those two cycles than what we have currently happening this cycle. Just take a look at it for yourselves. You don't have to take my word for it. We got bearish in 2022, by the way, in April. We did catch that move lower. We were bearish. We were uber bearish. I was screaming it from the rooftops. It was a perfect bearish technical signal, and we had a Fed pivot. They were going from lowering interest rates to skyrocketing hiking interest rates, the fastest, most aggressive rate hiking cycle ever. Yeah, we were uber bearish back then. We're not uber bearish here. We know that new lows could happen, but in terms of like how much more are you looking to gain? Anybody that is looking for $30,000 targets right now, I mean, is it possible? Yeah, but if that happens, something else is fundamentally broken, most likely. If nothing is fundamentally broken, I think that the base case is the lows, or you're real close to the lows, like maybe a few percentage points under the current lows. Maybe. You might get like one more weekly flash or something like that, right? Let's go out here as Bitcoin's finding support at the daily open. So like here is your current low. That's your year 2026 low, bear market lows. So I would be thinking like if you got a weekly candle closure under that, then I would be a huge buyer at that candle's low. So as soon as I get my pen tool pulled up here, I will display that on the monitor for you so you can kind of get an idea as to what I'm saying. But I understand that new lows could happen, obviously, right? We could trade right back down here. But if you did take this low out, I would anticipate something like this, a weekly close like that, and then with a wick, maybe a large wick. And then when this new weekly candle opened, if it went lower, I would be a massive buyer there. Especially if it can't like break down and start moving fast. I would anticipate if it's a very slow, choppy environment around that final low, that would probably be the low. But my base case is we do not even do that. You do not even do that. You've already been massively overbought down here. This is a big indicator for this asset. You can look back at all the historical data. This has been the cycle lows every time. I just wish he would do a little bit better in communicating that point, right? Because it's a large audience. I mean, it doesn't really matter. People are going to buy no matter what. The people that want to be involved in Bitcoin, they're involved. They're involved. But more people might be on the fence about getting involved in Bitcoin because they're still waiting for another bearish leg of price. They're waiting to get involved because they think, you know, there's going to be another 20, 30, even 40% decline from where we are right now. And that is so far on the outskirts of the probability curve, in my opinion. If you were looking at it as a distribution curve, right? Looking for another 40% drop, that's like maybe 3, 4, 5% in probabilistic terms. It's so like it's not just a doomer case, it's like very slim margin case. But it could happen, obviously. Price is it's emotion. And if you start to head lower aggressively, then people are going to get more emotional. Those selling will beget more selling, if you see what I'm saying. So it is absolutely possible, but in terms of probabilities, to break down another 20%, 30% from where we are, I would say the probabilities are like 4. In terms of 0 to 100, you're at a 4 or a 5. Like the house would take that trade with you every time. They're very low, very low. Anyways, yeah. But if you want to be bearish an asset that doesn't have any value, at least, and at least you're putting those probabilities on your side. Right. All right. So yeah, Bitcoin kind of trying to hold support here at the day open, the 3-day open. We'll see what oil does. We'll see what the dollar does. The dollar pulling back here looks good. It's what I want to see. I want to see the dollar heading lower. I just don't know if it can with that large of a gap up there. And obviously people are bearish because of Trump and what he's done, and rightfully so. Rightfully so. I get it. I understand why people are bearish. I do. And also, technically speaking, Bitcoin is still very weak. It is still very weak. You have not even tested the weekly 21 exponential yet. Last week you got so close, but close doesn't count. Only in horseshoes and hand grenades. Doesn't count. It's not a test. It's a close test. It got front ran. That's how weak it is. Like, people were licking their chops to put on fresh short positions as Bitcoin traded up to the weekly 21. It is extremely weak. That signifies a weekly 21 retest and fail. It's testing it now because it pulled back so far, but it didn't last week. Yeah, they're licking their chops. It's the first weekly 21 retest since Bitcoin lost the 21 back here, right? So this signifies that it is a very strong bearish trend, especially if price can't close above that. The 50 is looked at as a strong trending indicator, and the 50 is all the way up here at 86. So yeah, in terms of structure, it is still very weak. I don't know why it's showing signs of weakness this much weakness while everything else is already ripped. That could be a bearish case. Like, it could happen. I'm not just a perma bull. You could definitely go lower. Just make sure your risks are mitigated. Make sure they're mitigated. Yeah, that's basically all I have. The 4 hours, the only time frame where you do have constructive positive price action, where you do have a golden cross where the 50 EMA has completely crossed the 200. You have not even retested that yet. This is my base case. My base case is Bitcoin, if the dollar goes up, to fill that upside gap, or maybe it doesn't even need to fill it. Maybe the dollar just wants to test the weekly or daily 21 exponential and then roll over, right? Maybe that's what happens. Even then, my base case would be that Bitcoin probably does come back and test 70K at a bare minimum, because that's where the 4-hour 200 is. So if you're getting ready to see a bullish trend start, which we don't have enough data to say that objectively yet, but if it's in the workings right now, with constructive price action, this is where I'd want to see support hold. And I'm not talking about directly on this price. I would want to see a basing structure form under something like this. If you could form some kind of basing structure just under the 200, right? Then, as long as these lows hold, I would still have a near-term bullish bias. I would be looking for this thing to break back out and then go up and make fresh monthly highs, and then close above the weekly 21, start to show signs of, construction. But it takes time for all of that to happen. And we're looking for opportunities every single day. So our bias on the near term shifts from day to day. Day to day. Right now it looks more bearish to me. You've got this long-term trend line. I didn't see it because I rarely focus on trend lines. I do. I mean, if they're there, I will put them on, and it's not there off log. I have a bad habit of looking at price off log, but on log, obviously you have a trend line here that is also acting as resistance. There are massive levels of resistance overhead. Got the weekly 21, you've got February's high, you've got this trend line, Sailor's strategy's cost basis, you have the February open, you've got the yearly open. Basically all major levels of resistance reside under the yearly opening range though. So if you were to become positive back on the year, that would be very constructive. I would assume that first year open retest would be a selling opportunity for some, obviously, but I would, longer term, I obviously think that Bitcoin goes above that and probably higher. We just need that supply shock to start, a short squeeze to start. Once that happens, then price could be very aggressive to the upside. But as long as we're in this longer term 3-month range, you can be a seller at the top of the range and a buyer at the bottom, essentially. Daily 21, let's make sure that we have that in the right place. Yesterday's close, it was at 776. Yeah, we're right smack on that price. 72776. We're good. Okay, so this is where the daily 21 exponential is setting from yesterday's close. You want to use the day's prior close, because if price pulls back down here, this indicator is going to close back down. The indicator is tracking price, but it's set in stone at the close. So you can definitely see how there is a little bit of weakness here, right? It couldn't break out above the prior day's high and continue like it was able to do pretty much all month. Like it had no problems breaking out above this high, giving you that continuation move, and then closing strong, spending a few days in consolidation, and then boom, breaking out above all prior highs, closing strong, Same scenario, boom, breaking out above all prior highs, closing strong. So you are seeing a little bit of weakness come in here now, right? That's why you can hold a short, objectively speaking. As long as price is trading under the prior day's high, then it is showing signs of weakness. You just have to set a stop loss in case your ass is wrong. You know what I mean? Yeah. If it breaks out above that again, it's probably going to be a trending move higher, and the short trade is going to be wrong on a day-to-day basis. Trading can be so simple. It can be so simple. People like to complicate it, though. All right, let me look at some of these questions. Let's go look at what Farcoin's doing. I have Farcoin pulled up on the top monitor, as I already have a short position on. I was looking at the exact same thing. We're seeing an inability to close above, or at least put in a trending move to the upside. Right now, this does not look bearish. It looks more bullish. But once, like I said, the 8 hour is kind of in the middle of potentially either A, rolling over, or B, building in that support and starting to rally to switch around the look on the higher time frame charts. But if we go out to the daily, you are trading under yesterday's low. And as long as that is where my short is. If we're trading above that, I'm getting out of the short, because I understand that a breakout could happen and we could go right back up to 21.59, which is going to be Sunday's open. And the liquidity squeeze point up in there is going to be Sunday's high. So there really is no point to hold a short anywhere else. Right there, that's good. If it breaks down and starts to trend lower, we'll be situated perfectly for it. It just isn't my base case. I like the short because of the deltas. I do not like where the point of control is on today's volume. If we pull up the session volume profile real quick on Farcoin, you'll see it's right in the middle of the range. Generally, I want to see a trending delta in the direction of my bias. Okay, if I have a short side bias, we're trading under the prior day's high. Yes, okay, good. I want to be short. Do we have deltas trending lower? Yes, good, perfect. Those are good indications that I might be on the right side of the trade. What I would love to see and would be a little bit more helpful, obviously, if there was a higher time frame 200 above price and this red line was up here, indicating that a lot of people were taking that same trade, had the same bias. That would be like a perfect setup. But because the 4 hour 200 is underpriced, because the daily 21 is underpriced and all this stuff, the bias is more structurally bullish than bearish. But it could be breaking down, right? It could be. But we'll see what happens. It's a dip. Generally, in a bullish month, you want to be a dip buyer. There is no dip to buy today. The dip to buy would have been yesterday or, Sunday. I did try to buy Sunday's dip, and this candle stopped me out. So there's that, right? It looks fine for a downside trade. You're showing signs of weakness, signs of reversal. It could be fine. I don't like that today we have a higher low from yesterday's low, but it is what it is. We also have a higher high. I don't like that either. I would like to be shorting a lower high. That's like a perfect scenario. Yesterday, these guys did short a lower high. All right? They tried to short a lower high earlier in the day too. It did not work. But even if you waited until the end of the day and shorted the high of day, it still was a lower high. You did not get that lower low. It went right back up and made a higher high. So the near-term pressure is more bullish than bearish. Being short in this market right now in the month of April, whether it's Bitcoin or Farcoin, you're on the counter trend side of the trade. You are trying to call a reversal. The trend is up, objectively speaking. All right, but trends can change. Good morning. Good morning. Pixel Property, Bravo, Tom. Good morning, everybody. Janet's thoughts. How is coin looking from Pixel Property? Oh, here are all, by the way, here are, we'll look at coin right after this, but here are all of your Bitcoin gaps on the CME. I've seen a couple people post, and there appears to be a lot of interest on that. I don't know if you know how to get the gaps or if you know where the gaps are, but if you do not, right here they are. All right, these are all of the near-term unfilled gaps. That's all of them. That is all of them. I went all the way back to 10K, all the way up to 120, all the way down to 10. These are all of the gaps. There are a couple more under down here, and obviously there's a very small one at 9,000. But yeah, I mean, gaps do not have to fill. They usually do. Got one big one overhead, one small one just under. I do not like this structure. To see so many bullish candles in a row and price really hasn't gone anywhere, I don't really like that. It's showing that the sellers, for whatever reason, haven't been able to take over because they're just not here. If the sellers were afraid of something, they would be selling. That's how selling pressure works. It's usually fast and aggressive because it's fear. It's pure emotion. But there's all the gaps. Let's go look at coin. Coin looks okay. Obviously it's at the top of the range, and so is Bitcoin, right? So basically doing the same thing that Bitcoin is doing right now. It's testing the liquidity at the top side of the range, seeing if there's any demand here or whatever it is that price does, right? Whatever you want to say it is that price is doing, it's doing that at the top of the range. Had a nice bullish bounce off of the 2024 open. That's probably not the technical signal that caused the bullish pressure. I would say it was a higher monthly low. And then once you got above April's open, I would say the buyers were like, sign me up, bro. As that seems to be what happened here. You know what I mean? When you broke down under and started a trend, it was once you got back above that, that's when the buyers said, okay, we can buy it now. And then boom, boom, boom. So, I mean, I wouldn't be a buyer here because you're into resistance. It's clear resistance. You've not been able to close a daily candle above this daily candle's close. So that is the near term daily resistance level that people are selling. But this structure looks okay. As long as you're not trading and closing under yesterday's low, it looks more positive than it does bearish. If it were to break down under yesterday's low, then I would say, yeah, there's a really good chance that it continues to the bottom side of the range, or at least to the midpoint, right? This is the range right here. So if it fails here, which so far it has, if it continues, then I would say you're going back to 176 at a bare minimum. But I mean, buyers can show up literally anywhere. There's not really very many. There's an old prior weekly swing high there. Maybe buyers are targeting that. I don't know. And you won't know either until price gets there and it spends a little bit of time there. But I mean, right now it looks okay. You got earnings coming up in a couple of weeks. Keep that in mind if you're trading options. But I mean, it doesn't look terrible. It looks good. It looks constructive. If it can, like, say it trades in yesterday's range for multiple days, I would be more constructive. I would be more of a trader trying to get positioned for a breakout. That's basically how I'd mitigate this whole scenario right here. Is that's your weekly low, right? And price is refusing to get down there right now today. It's still early, but that is what's going on. So your weekly low is going to be right here. You're trading well above the weekly low. So if support can come in on an intraday basis above this, I would probably be more bullish on the near term. The trend looks good, but it does look like a double top. It does look like it is failing. You are losing bullish momentum, but that's normal. That's what happens at resistance in a range. Tesla also had a nice recovery off of the lows. Looks like it's trying to build in some near-term support. I don't really love where it is. It's a higher low though. So this is going, let's get rid of this. This level right here is going to be hugely important, at least for today. If it can stay above this, that might influence more buyers to show up, assuming this is going to be a higher low on the weekly range. If you break down under this, that will cause sellers to show up tomorrow and Thursday, because at that point you will be trending lower on a weekly range. The weekly candle looks fine. It's a pullback at best. Monthly candle looks good. Upside liquidity pinch for now. 416.38. That's the bull's target. Yeah, that's what you got on Tesla. Apple had a nice breakout above resistance here, letting everybody know right here on this day that they were wrong on the short. Apple is completely constructive on the daily time frame. You are complete and totally bullish and in a bullish trend. All moving averages are right where they need to be for bullish trend continuation on Apple. Unfortunately, it's going to be like that on all assets. Nvidia, not all-time highs, but you have fresh 2026 year highs. You did it in spectacular fashion. Looks like it wants to go higher. If you get good news on the straight, guys, this thing could literally start a short squeeze of epic proportions, because retail was short tech specifically. I couldn't find that XLK option open interest that I posted several weeks ago, but the spike on put volumes was so bad. Like, it was the biggest it's been in the last 15 years, and it was by like 3 standard deviations. Retail was so freaking short. That is why this spike was so aggressive. That is also why we were like not super bearish. But I mean, everything looks fine now. Everything looks like it can continue. My only question is, why isn't Bitcoin squeezing yet? Yeah, that's where I'm at. Bitcoin is kind of like in no man's land here for me. It's more bullish than bearish. We were looking at the open. That was the last buy area that I instructed anybody to look for. Unfortunately, it was after the open when I said that. If you get a retest of the open, you could buy there and see what happens. Because I like the idea of buying the weekly open, but that's only if the weekly expansion happened to the upside. It did happen to the upside. It's just not been a broad expansion. It's been a very slow, mostly sideways chop. I think it's based on the dollar. I think people are basically waiting to see what the dollar does here. Yeah, the dollar isn't giving a pure signal. We know that the macro supports more of a bearish dollar. Of course, I mean, rate cuts support a bearish dollar. The market's pricing in 2 more this year. But risk headwind and headline risk is what got the dollar up and at 'em. We would love to see the dollar break down. Start a macro downtrend. That would be fantastic. That would help Bitcoin epically. If the US government is about to print, like, to fund this war or anything, and the way the markets are acting, the way the call buying, if you guys didn't check out Saturday's upload, go ahead and check it out. It's a pretty quick video. I think it's like 8 minutes. There's nothing in it really, other than just pure alpha. I generally don't do a lot. Oops, something went wrong. All right, I don't know what that's about, but let's see if we can do this. My PC's been acting funny. It might be time to get a new one the last 2 days. Videos, bro. This one right here, it goes over, you know, a little bit about everything. We went over most of this analysis on that video. It's pretty quick, but I think you're seeing a lot of people position basically because because market participants think that there's going to be some printing happening pretty damn soon. We saw institutions literally run to calls, and the S&P 500 was only down 9% in the month of March at its worst, right? It was only down 9. That's a pullback. It's not a pullback that happens often in, like, say, per year basis. You might get just a couple of those 9% drawdowns on the S&P on a annually basis, but it does happen. Most of your pullbacks are going to range between 1.5% to 5%. That's where the majority or the bulk of pullbacks are going to be. So on the S&P moving forward, where is it? Right here. You would most likely be bullish on any 1.5 to 5% pullbacks. So back to the year open is a little over 3.5. If price stays above that, I would be uber bullish based on call positioning from institutions. It's up dramatically from January 2025, 33% higher than normal. They are not just bullish, they are super bullish. They were looking for the short squeeze, obviously. They knew retail was super short. And I think Bitcoin's going to catch up soon. But it's not acting like it, you know what I mean? It's very sluggish. And that could be an indicator. Jory Affairs, as far as stocks, would you look at AMC for a swing trade or is it trash? Okay, so AMC, a lot of people quit going to movie theaters, man. You have a lot of reasons why, right? A lot of reasons why. Is this even the movie theater company? Or is this wrong? Am I wrong on that? Entertainment. It is, right? I mean, it's trash, bro. There's just a lot. The chart is trash. It is absolute dog shit. You had a reverse split down here. That's just to keep it from going to zero. Like, all of the big money that was in AMC is gone. They're out of it. Not only did they bailed a long time ago. Yeah. You can say it's Hollywood's fault if you want to, be political and edgy and all that. It's the actors themselves' fault, preaching to their paying customers, and people got sick of that shit. I would blame it more on technology than I would that. right? Because I still love movies. I haven't seen very many good ones lately, but I do love them when they come out. In terms of going to the movie theaters, I haven't been in years. I have like a 75-inch, big ass, top of the line Sony whatever in there that I would rather watch movies on that than go be around a bunch of obnoxious people. So I think times have changed. Technology, times, it's just different. I mean, young kids, are they even going to movie theaters? Probably not, right? Most of the young kids, they were born with an iPhone in their hand. What do they need to go to a movie theater for? It's a different time. It's a different time. They need to figure out something. They need to do something. Or no, yeah, this anything under $5 cannot be held by management funds. This is a penny stock now. Could it spike? Yeah, they could come out with some good news and stuff, but I mean, I think it's a fundamental issue that's happening right now. That's just my opinion. Let's look at what the analysts are saying on it. What are they saying? So only 8 analysts have even said anything, and that's definitely not good, right? That's generally a red flag right off the bat. But they're all sitting at hold. 1 says it's a strong buy. 1, I wouldn't be a seller of it either. I mean, there isn't much more to squeeze out of this thing, and just short covering could cause this thing to rally. So in terms of like juice left to get on a short, I don't think there's much on it. This thing was trading at at the highs after COVID, almost $400 a share. Now it never did get up there. There was a reverse split right there, but still, right? But still, it's way bad. It is a dog shit chart. I would leave it alone. You could trade it or, speculate in it. Say, hey, if it drops to like $1.50 or something, maybe a short covering rally spike could happen or something like that. But in terms of no, I think bad shit's coming for them specifically. I wouldn't be surprised if we start seeing people close theaters down. Hollywood needs to figure out something, and it might be too late. It might be too bad, too sad. They're just like when they blame the audience as the reason it's failing. When nobody wanted to listen to their dog shit, right? We wanted you to make movies. We wanted you to entertain us. We didn't want you to preach to us. And now they're paying for it. Yeah. Kids nowadays want to be a famous YouTuber, not a famous actor. You know what I'm saying? It's like times have changed also. I think the theaters were going down anyways before Hollywood started preaching to us. Less and less people were going. It's too expensive. What are you going to spend to go catch a movie? An easy $50 bill is shot to hell, right? Just to get 2 tickets and a bucket of popcorn. You've shot $50 all to hell. It's just different times. Could it recover? Maybe. It's maybe. Who knows? Hopefully that helps. But I mean, that's just my opinion. There are far better stock pickers. I'm a price action analyst. That's it. Specifically, people come to me to get my levels and my opinions is in terms of Bitcoin, Forex, the indexes, oil, things like that. Individual stock picking, I leave that up to the guys that dig into the tax papers and all that stuff. You know what I mean? Those people, they want to dig through earnings per shares and EBITDAs and all that stuff. Like the Tom Nashes of the world and other analysts. Those people are probably going to have better information on something like AMC than I would. So Bitcoin's still holding 3-day open support. And it looks good as long as that is holding too, I might add. It's not only positive that that's holding, it's actually a good sign, right? That indicates that, you know, at least as long as it is holding, that it probably wants to go up. I don't think the sellers would have any problems busting this thing back down below 75.5 if there was that much fear out there. Looking at the fear and greed index, it has pulled back some. You have broken out of the extreme fear. Understand, this indicator has been pegged at extreme fear for 6 months. 6 months is a long time to be extremely bearish on an asset. It's now starting to go in the opposite direction. That is a good sign. That speaks of recovery. Yeah. Oh, wrong one. Speaks of recovery. So yeah, I mean, it's starting to, the more time that it spends in extreme fear area without breaking down, starts to smell like seller exhaustion. To people that's been doing this for any amount of time at all. Extreme fear means that you have people that are literally selling to get out, like they're afraid. The fact that the sellers have had a war, a new war even, it's new, like it's a new war, oil spiking, you had the S&P down 9, you had so many perfect macro conditions for the sellers to just kill this thing. And they couldn't. It isn't because of a lack of trying. No, it starts to feel like sell-side exhaustion. To me, right? And to other people out there, we understand that selling happens quickly, aggressively. This feels more like accumulation than distribution. You had everything you needed. Slowing down, all of that, that's all positive. VIX is back off. Let's see, you were at 30 a couple weeks ago, you're at 19, 13 now. So still elevated, as anything above 15 on the VIX is considered elevated, but with Donald Trump in the White House, I would say is more normal. I would say with Donald Trump in the White House, instead of looking at a 15 VIX as being elevated, one might want to pump that up to like 2250. So the VIX is back down into normal Donald Trump territory. When the VIX is low, that indicates more bullish price action than bearish because your ranges are small again. And yeah. The only thing that hasn't happened yet is Bitcoin hasn't started to rebound in that bullish trend. Once it does that, your bear market cycle is over. That's what a lot of people are waiting on. They're waiting for that bullish indicator to kick on. Once that happens, it's off to the races. Because there's already a supply shock. It's looking okay, so that's probably going to be disastrous for any Fartcoin shorts. We'll see, but yeah. Doesn't look great. Let's kill this indicator and let's kill this indicator. We don't need them anymore as we got all the data we can use. This thing's been chopping around here since 8:30. It's going on 10:30. That's 2 hours it's been down here. Now you're spiking. It's still below this one, but I mean, it looks like a dip. 2 hours. Starting to feel bullish. Pants check, says Wes. We have none. I got my Bitcoin shorts on. Nope, I lied. I got on the same kind of shorts, just a different color. They're gray. No Bitcoin logos today. But no pants. Still shorts. They're running Top Gun in theaters. LOL. Give us money, please. Yeah, Top Gun is fun. I own it. I own both of them. I like them movies. I was a kid when the first one came out. A very small kid. Love that movie. I love fighter jets. They're freaking awesome. Yeah. I saw an AI video the other day. It was a YouTube short of like, it had the guy from 300 in it. It had all of the massive chads from Lord of the Rings in it. It had Russell Crowe's Gladiator in it, and they were like, it had the wizard from Rings, all of the chads from like, Generation X, all the heroes, all in one video, hanging out riding horses and stuff together. It was a pretty cool video. AI looks fantastic. I mean, you can't hardly separate it. It's already difficult to tell if it's real or not. Obviously, that's AI. I was thinking, damn, I'm old, because all of those actors, Gerard Butler and like all of them, Russell Crowe did Gladiator when he was a young man. Russell Crowe is an old big fat guy now. It would take him years to get that body back. But fantastic little AI piece, I thought. I got a grin. Back when all those movies were huge years ago. Hey, it's the world the Hollywood actors wanted, right? That's what they wanted, and that's what they got. I think it's making of their own doing, myself, and technology. Obviously, people are gonna want to watch movies in their own house. Unless they want to go to the theater. That's different, right? There's still those people out there that love going to the theater, but they're very few and far between. Most people did it like special occasion type stuff. Anyways, so yeah. Ethereum has a very small trading inside day here. Ethereum got so close to liquidating February's high, but it was unable to do so. So that kind of feels like that would happen before it rolled over to me. But like I said, that news that came out over the weekend, that's essentially what took prices back down. I think if we got some good news over there in the Strait, that might help propel cryptos back up into these higher ranges, but we'll see. I know there was a hack that happened yesterday between Aave and something else. There's another $280 million hacked from North Korean, or at least the post I read. Could be fake. I don't know. North Koreans figured out a way to hack another cryptocurrency, which is that's bad. I don't look at Bitcoin as a cryptocurrency. I mean, I guess technically speaking, definitionally wise, it would be considered one, but I look at it as something completely different, right? But I think Bitcoin's going to need to rally for sure before any of these things really start getting going again. And I don't know which or if any of these meme tokens will. I think some of them will be okay, like the ones that have decent liquidity. Fartcoin, there are a few more. Ponk has very thin liquidities anyway. And then Pingu, like, it got decimated. It went all the way down to 80% off on 1010. So it was just on the lows, right? It was literally the lows, almost to all-time lows. That was an 80% decline in the asset's value. It's hard to recover from stuff like that because you blowed out everybody. But it looks like it's doing okay. It's still massively range bound. It's like the last 2 days have been very constructive though on Pingu. I would say that it's getting close to the time to start picking random alts, like just put a bunch of them on a Wheel of Fortune type of thing and just spin it and put a blindfold on and start throwing darts. And whatever ones you hit, those are the ones you buy a couple, just a few dollars of. Because I think if Bitcoin does start to rally aggressively, there will be some alts that participate in that rally in a spectacular way. We've already seen a couple do it. I mean, Rave went on one of the most aggressive short squeezes I've ever seen in my life. That thing was at 99 on the RSI at $3.50 on a 12-hour RSI. It went almost to $30. Like, we're talking tens of thousands of percents to the upside. Now, obviously, there's some news saying that there was some manipulation or funny business going on, but I mean, we quit playing with it then. Because we understand that it can go way higher. There's no edge in trying to short a massively overbought asset other than it's overbought. That's not an edge. Any edge that I had was short-lived. There's no way I can buy something like that either. It's just a matter of time before it pukes. But some have done really good. It's back to down pretty much to zero. What is moving today? USDT all. So Rave is up 150% today alone. And that's going to be just a short covering rally. So I wouldn't get involved. It will most likely get faded, but yeah, I mean, damn, dude. Absolute insanity there. We can go as close to the breakout period as we almost 10,000%. Yeah, just absolute insanity. 99 at just a couple bucks. It was at 99. And it just kept going and going and going and going and going. Just, I mean, fabulous. I didn't participate. I tried 2 shorts on it, and it only goes to 100, the indicator. So I like everyone else, assumed it was done, and it wasn't. It wasn't even close to being done. Almost $30. And it's up 150% today alone. That's going to be a short covering rally. It will probably get faded, but I mean, The same thing. There just ain't much juice left on this lemon, and all of the big volume is gone. So this thing is toast. It'll probably just trade sideways to down for the rest of its life until some news comes out on it. Well, this says it's only up 47%. That's because it's already pulled back. It's probably scalpable, though, because it's absolutely cooking with grease right now. My light is flickering. That's not good. No. Need to twist it in a little bit more, but you'll get burned if you try to do that right now. I'll take care of it here in a minute. Yeah, let's see just real quick how much of a percentage move this 30-minute candle is. Yeah, it's moving a lot. So, I mean, it could be scalped. Yeah, I mean, one could look for a potential long scalp on it. I mean, just to say maybe that short covering rally isn't finished, only if it stays as a high or low there. Just understand that this thing is literal garbage. I would say it's just done. The volume is toast, and that's why it's sideways. There's just not many people participating in it. If you'd rather be a seller, then you'd be looking at resistance levels, but not much edge other than that. This thing, whew, was insanity. I know a lot of people lost a lot of money on that. A lot of people lost a lot of money. Ontology's another one that was moving absolutely crazy. Siren was a big mover not too long ago. Just bananas. Kite is actually holding up pretty good. Let's see what ICO'd at about 7 cents. So you're up about 50% from the ICO. But you're down also 70%. So, I mean, almost 70% on the lows. Some of them. Ooh, look at Bone. Bone's starting to squeeze shorts. Book of meme. Big rounding bottom and then poop. Up she goes. Nice. I was looking at one yesterday. Weeks had talked about it on their X. Luna also spiking. Or Loon C. Luna's gone. Moan looking okay. XMR spiked aggressively too, but it had been trading very sideways, very choppy for a while. It was a difficult trade. I didn't catch that. But you can see ZEC is starting to go here a little bit. There might be a long trade there on that. Looks good. Can it continue? That's the question. It's on everybody's minds. This needs to be moved. There we go. Yeah, Zcash could hold 316.71. I could potentially be a buyer, but I mean, it doesn't look like you're even going to get that deep of a correction here. Beautiful bounce off that monthly VWAP. I'm pretty sure that's April's. Yeah, it is. It's a real good bounce. That's where I would I would literally want to see that continue to hold on pullbacks. And eventually for the trend to get strong, for the trend to get strong, you're going to want to see it holding the 50 on pullbacks. It's trying to basically figure that out right now, as this green line is your 50 EMA on the 4-hour time frame. You would want to see that hold. You've got a complete and total bullish structure here on the daily time frame. Absolute beautiful thing to see here. If you were a bull on Zcash at $300 per coin. Oh wait, never mind. I take that back. I was looking at one of these numbers down here. This is way further. If you were a buyer in this like sideways consolidation around the midpoint, you're doing pretty good here. You definitely want to see it continue to hold the 21 on a daily closing basis. So this is what we want to see Bitcoin do. Yeah, very small range here on the SPOOs, man. It's because of this right here. This could still be a buyable opportunity on the DXY. My base case is that the dollar breaks down, but yeah, Farcoin's back up. Might be seeing some news or something happen right now, as we did just get a spike. So we could, let's see what the dollar does here. As if it stays above this low, holding the short is still going to be the trade. As long as it's staying under this level right here. 30-minute res is at 2069. If you get a 30-minute candle closure above that, the short trade is no longer valid. But as long as candles are closing under that, you can still hold it. So that means I would be willing to sell oil here if the dollar in fact does make that lower low. Because we could be seeing a trap here. You're pretty much above everything. This would be a liquidation above the weekly open. Right? So the next 30-minute candle opens. Basically what we'd be looking for it to do is liquidate the high of this current oil candle. So wherever this high ends up being, when it closes, we would want to see the next 30-minute candle open, liquidate it, and then fail. And then if it gets back to red, right? Because while it's above the high, it's going to be white. Just as soon as it turns back to red, you can hit the sell button, stop. And if it's a trap, a bull trap, and this only liquidating shorts that got short directly on the week open, then it would roll over, right? But that's only if it's a trap. So we may still be able to be short. It just, we'll have to transition from being short Fartcoin to being short oil. But as of right now, it's continuing. You're making a fresh day high and you're continuing. So right now, it's a little bit, if you try to short it, it's a very aggressive short. This line right here is nothing. We want to wait for yesterday's high. Yeah, it looks like it kind of might be aiming at that. But that's only if the dollar breaks down. Like I said, the dollar this could still be a buyable opportunity on the dollar. But things are starting to change around a little bit. As Bitcoin refused to break down, there really isn't anything to go by here because it was a pretty good trending move lower. But hypothetically speaking, it is still under resistance. Hourly res is up there. It'd be a hard short to short this big bullish candle, but it could still be a short. If the dollar holds, that's the thing. We don't know what it's going to do. Never do, never will. Let's check and see if the deltas have switched on Fartcoin. Not really. Not really. So the structure still looks okay. Well, you do have a very near-term direction shift here, but it's not trending up yet. Where is that value area high at? And we're right into the value area high. Yet there's no point in closing it unless you get stopped out. Obviously, you need to have a stop. This thing is definitely looking like it wants to break, but it's still shortable. When the dollar is choppy like it is, it is very difficult to get a directional bias. Okay, there's the liquidation on oil right there. So if it's going to roll over, we do not want to see it stay above this white line. As long as it's above it, you are trending, and there's no point in opening the short. Because this breakout could be a real breakout. And if this breakout is a real breakout, I would anticipate this dollar is going to hold support. See, when you're looking on the small time frames, you can't really see what's going on. You know what I mean? It looks destructive, but it really isn't. Really isn't. Would love to get most people looking at the higher time frame charts. You can still be a day trader looking at a 4-hour chart. You just don't have to look at all this stuff. You can just keep your eyes on one candle. That's a support test. That's a support hold. It broke down yesterday and it came right back. So you have to give the respect to the bulls. But definitely still keep holding that Fartcoin short. Yeah. You start to see these deltas making lower lows and price starts to follow it. You probably will see it break down. Well, we'll see. We'll see. There's a significant bounce up there. The sellers just are not aggressive. Volumes are super light. There's not any huge news anticipated for this week. Nothing major, nothing New York. Got retail sales that came out today, but you know what I mean? On the retail sales. That happens every week. Nothing major though. So Yeah, very slow, boring price action. Euro is fading pretty hard. Bitcoin's starting to come off a little bit. Yeah. We need the dollar to kind of give us a signal. When it isn't trending, it's difficult trading. Jewelry Affairs says XRP breakout soon. I mean, it will if Bitcoin does. We'll look at it, but we look at it every day, and my answer is always the same in terms of that. It's going to do what Bitcoin does most likely. It'll just because it gets flows from Bitcoin. It looks okay. The order flow is not very bullish today in terms of deltas, but structure is more bullish than bearish here. You're up on the month. Yep. You made a fresh month high. Yep. This is a small intra-month pullback and it got bought up. So it looks okay. But if Bitcoin fails here today and ends up being a down day, so will XRP. If Bitcoin breaks out today, then so will XRP most likely. There's not much happening. I think the people that are participating in the USD-JPY trade is literally what's keeping the dollar afloat. It's almost like we're going to need to see that USD-JPY unwind to get that dollar breakdown. And you're probably not going to see that happen until the BOJ intervenes. A dollar yen has been chopping for a long time now, and it's not rolling over. Let's go look at the dollar yen real quick. It's literally not rolling over. So it feels like this thing wants to break out again. And like I said, I kind of feel like this asset right here is the reason why the DXY is not rolling over. Because people are still willing to keep putting on this carry trade here. It's almost like they're going to stay long and strong this asset until the BOJ intervenes. Because there's nothing on the macro that says they shouldn't. We looked at USD Turkish Lira yesterday. And this is what the BOJ does not want to happen to their currency, right? One of the guys in the Discord named Bradley, he made a joke saying that these are regular candlesticks and they look like Renko candlesticks. You know what I mean? He ain't wrong. It kind of does. I've never seen anything like this in my life. This is a weekly time frame. So red candle here. You didn't get another red candle until you put in 17 weeks of upside. Red candle there. You went another, 26 weeks of straight up. One red candle here. And straight 15 weeks up. So it's like there's a clear, obvious pattern here. This is what the BOJ does not want to happen to their currency, so they will intervene again. But it's getting to the point to where investors are keeping it up to where like they might have to. I thought maybe just by thinking that the BOJ would intervene, that would keep investors, have some investors start to sell, but that has broader implications to other risk-on assets. So maybe not. Trade the chart, right? If you trade the chart, this chart is still bullish. It's choppy, it's in a range, but it is still bullish. It looks like The target is last month's high. This is a beautiful pullback, and they bought it up. Looks like a breakout is coming. Look at all these underside wicks here. Every time you get the pullback, they jump on it. Every time you get a pullback, they jump on it. Pullback, jump on it, pullback, jump on it. It looks like just a matter of time before this thing is ripping above 160. 160 is a big figure number. It's where they intervened before. You have some people saying, no, people are going to take profits or they're going to close that carry trade. That's going to be mostly retail sentiment. Retail's about to get dumped on again. All because they, for whatever reason, keep trying to sell this thing. This is the product that is keeping the DXY afloat. It's a very long-term trend here. Big trend line. We got a monthly close under it and then right up. So this could still be anticipated as a buying opportunity. So we're not out of the woods yet from the dollar breakout. And I want to get positioned for whatever happens. If the dollar is threatening a breakout, I do want to be bullish the dollar because I want to be in that trending move if it were to occur. And the same goes to the downside break. If it looks like it's going to be a downside break, I want to get in that for that. The dollar's been sideways for a year now almost. I mean, it's a stretch to call it. It is still trading inside this candle's range, but it's definitely not a stretch to count all these. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So almost a year it's been in a range. A breakout could be a large one. Or breakdown, either one. Whichever move occurs, it could be a large move. It could be a macro move. And since this is happening, I think we're seeing that translate to Bitcoin a little bit. So there goes. Like I said, you're still under resistance, so you don't have to get out of the short. And there it goes. Starting to go. That should be good enough. That should give us a new day low. I don't know what the news is. Let's go see if there is any news on Twitter. I don't have any news headlines up. Not news headlines. I don't have any news platforms up. Financial Juice is pretty good about getting news out. So let's see what he has to say or what they have to say. They'll sell war to make what great again. Oh my goodness. Whatever. Pakistan Information Minister, formal response from the Iranian side about confirmation of delegation to attend Islamabad peace talks is still awaited. Yeah, I don't really see that causing anything. The ceasefire ends at 4:50 a.m. Is that Pacific Standard Time? A decision from Iran to attend the talks before the end of the 2-week ceasefire is critical. And then he's reposting on that. Formal response from Iranian side about confirmation of delegation to attend Islamabad peace talks still waiting. They still haven't said anything, and then they dropped this. Is this guy the Islamic? Is this guy the Iranian somebody or what? I can't read this. Islamic Republic of Iran's parliament. He's the speaker. Okay, so he's definitely important. Yeah, Trump, man. What are you doing, bro? Yeah, Euro shat the bed. Dollar's breaking out, making a fresh high right now. Fresh day high. So you're above yesterday's open. That means you're threatening yesterday's high. I'd say that's probably the direction it goes now. It's spent a lot of time here kind of chopping, getting traders positioned for the short and then allowing them to get positioned for the long. And then you liquidate, and now the trending move takes place. It looks like it's going to go higher. So definitely stay on Fartcoin for the short, leave oil alone. Yeah, it's a legit breakout. You're above yesterday's high now. You're trending at this point. You're trending higher. Next liquidation point's going to be a 3-day high. You've got fresh weekly high. Yeah. It could go all the way back to last week's open. Don't know if it will, obviously, but not much. Yeah, this is going to be the liquidation, like, pinch point where the key liquidity is. 94.27. If you take out Sunday's high, that's exactly where I would assume it's heading. And there's your trending move on deltas. So that's what we want to see, and we wanted to see price confirm it. So yeah, hold the short. Don't let this spook you. That's the level we're short from. So good to go. We'll see if it gives us a trending move, but your target should be right here at 1985, just above it. Because that's the next key level of potential support. So you're failing 3-day resistance here on Fartcoin. So that means, like, literally on a longer time frame basis, you could potentially target the low of this candle. But the chances of it hitting today are slim unless you get a sizable breakdown. And I wouldn't anticipate a sizable breakdown. The volumes are too light. If you're short from here, taking profits just ahead of the 3-day open would be a 3.57% profit target, which is very doable. You're probably going to see a lot of wiggle on the way down there unless it's just a flash break. But chances of that, you got a VWAP here. That could cause price to wiggle a little bit. What I'm saying is I don't think it's going to be just a... I mean, it could be, but... probably take some time to get there. But yeah, it looks like it looks good. Euro is at a buying opportunity, or at a level that could be looked at as a buying opportunity. So we'll see if they do or not. I think you're going to need good news to stop this from breaking under the yearly opening range. But you can see, I mean, you've got this scenario where the euro is 57% of the DXY basket, and both the DXY and the euro are currently testing their year open levels. So key levels here. These are macro long-term levels. This level dictates the percentage the asset is up or down on the year. And it will cause people to act differently depending on where it is in reference to this level. You would be a buyer of the euro, say in July, most likely, if you're positive on the year for the Q3 trade, right? Q2, Q3. We're in Q2 now. But it's such a long-term chop slop. James Check calls it chop solidation. I think that's like the best identification, the best word to use in this scenario. Chop solidation. Literally what we got with the dollar. Sucks, but it is. Ceasefire ends tomorrow, Wes says. Do you think Hertz is worth a shot for a short squeeze? Has earnings coming up. A lot of short interest. Let me pull up Hertz to check the short interest real quick. Not this. I need FinViz. And then I need to clear off my cookies. All right, FinViz, and then you want Hertz. So what is that? HTZ. Is that the ticker symbol? Go away. Go away. The short float is 21%. I wouldn't say that it's a massive short float. Is it heavy? Yeah, generally anything over 20. Like that's what most people will run in terms of like a scanner for potential short float to be. It needs to be 20%, right? So I'd say you're right on the brink of having a large short float. So there is potential there for a short. It's already squeezing shorts. What do you mean? It's already squeezing. This thing was trading at $4 3 weeks ago. It's at $7.28. That's a 100% return. It's already squeezing. I would say that it could be over. The short squeeze could be over. I mean, long term, it doesn't look good. But this is a very constructive look if it can hold the close and above the midpoint. Then I would say maybe you got something to work with. Higher lows, that's a good sign. Long-term range, but I mean, you got to get all the way up here before you can classify this a breakout. This candle dominates the range. You're trading inside of this candle's range. So since April 2025, exactly 1 year, you've done nothing. So that's what it needs to do. Monthly res is setting at 685. I would want to see this candle close above it before I would even think about putting on a trade for a short squeeze on this. That's how I would trade it. As to could it? I mean, yeah, it could. I don't know anything about the fundamentals of this ticker. I know nothing about it. We can go check what the analysts have to say about it. Now, only 10 analysts giving this stock rating in the past 3 months. 6 of them say it's a hold. 1 says it's a buy. 3. So there's not enough data here. It looks like this indicator is looking for lower prices, not higher prices. But this indicator, I don't know if it's a good indicator or not. But just judging by this, like, nah. You're going to need a huge bullish catalyst to cause a short squeeze on this. Hertz Global, seeing travel behavior shift in ways that can support a steadier recovery path into 2026. Pricing is stabilizing. Depreciation is improving as used car values normalize. The fleet is getting younger, which helps profitability per vehicle. The next leg hinges on executing beyond the airport, tightening unit costs, and turning vehicle sales into a more reliable cash flow lever. Hertz search traffic spike signals shifting travel plans. Maybe. Right? Maybe. Search traffic could be because of the short squeeze too, right? I doubt it, but most people that are looking for Hertz would probably be looking to travel. Maybe, right? You're gonna need a bullish catalyst for sure. But watch monthly res. You've got 9 days on the monthly close. You close back under this is gonna look like it got faded. And then finally, let's look at the weekly structure. You're trading right into the weekly 200. This would definitely not be a buying area for me. I do not know. I change this every day, it seems like, and it never stays. Let me do it one more time over here. Which chart is this? Do them both just to make sure. Now hit save, and now hopefully I don't have to ever change it again. All right, but yeah, I mean, this is clearly not trending yet, but if you're about to see something, remember what I said, the 50 is considered a strong trend indicator. So on a pullback to the 50, that would be the opportunity if there is one. It is definitely not trending yet. And the dollar fell right back down. So we're not getting any kind of a continuation today yet. Just straight garbage price action. This happened one day. We were doing a live stream and we were short oil, and it was so choppy, so sideways. Not even 15 minutes after we got off the live stream, the oil price dumped. Maybe something like that happens again. I don't know, but there's not much going on today, guys. This is very, very thin liquidity in Fartcoin, and that's the trade that I have open. So I mean, I don't like seeing gaps on the 5-minute chart because it's a lack of liquidity. It means it's very light volume, very thin. Big moves can happen, but we'll see. We're not getting really any continuation. Back to Hertz real quick. Yeah, just I would be watching 549. It seems like if there was some news, this thing would be spiking a lot more aggressively than it is. So maybe this is like a short covering rally. Who knows why it's spiking? It is spiking, but it has been for the last 5 weeks. If it's going to break out above the 200, it's going to need something, I think. You're under yesterday's low, so you got a fresh weekly low here. This is where you would want to see support hold if you're looking for the move today or potentially tomorrow. It's an old weekly, monthly swing high. Yeah, it's your November high. Would I buy it with that much downside momentum? Not today. But yeah, the sellers are getting their move. Not the other way around. It has been pretty bullish. It looks like that's probably over with. Yeah, I think the fade. I think this trade would be the. I think it would be the fade. I probably would have been a seller too. Yeah, I don't know. It's just choppy. It's range bound. It's got a 20% short float. You want to look for like super high short floats for those kind of short squeezes. Is that a low? It is. Okay, so you just made a fresh day low on Bitcoin. If you're going to see continuation lower today on Bitcoin, that's where I'd want to see the sellers show back up. On an intraday basis, you could probably spike higher. Because that's where support was on an intraday basis. So this is kind of where I'd want to see that aggressive sell side show up. For the dollar to stay bullish today, for me to stay short, I'm not going to want to see a 4-hour close under the previous open. So the dollar can trade under the yearly open in this candle for the next 4 hours. I don't care about that, but it cannot make a lower low. If the dollar makes a lower low, that's going to shift my bias. I definitely would, to stay short Fartcoin, I would want to see the buyers show up here. Or here at a bare minimum. I would want to see that lift stay aggressive. Because this just feels like we just ran both sides of the market and it's falling right back into the day range. Because this was your high of day on the dollar. This is Monday at 9 o'clock. Right here is your DXY day. I do not know why this dollar chart always lags up. Every other chart is fine. Bitcoin, fine. Fartcoin, fine. Just random charts. Tesla, fine. Random. Dollar, lagged up. What the hell, dude? All right, so right here, you can clearly see that's your low. So you didn't make a fresh day low. There's your day low. But you did make a fresh day high. Bitcoin sellers today will be watching 4-hour supply. You've got a 4-hour supply here because you closed above resistance. That's a higher close. Wicked up, failed, rejection, boom, broke down. So people are going to be looking for shorts right here now. Looking for downside continuation. So if Bitcoin fails to trade above 76,114 and you bought it this morning, you might want to think about closing it. USD JPY spiked above the week open. That's an old week open, ain't it? That's not this week's open. Never mind. Last week's open. But it looks like it's trying to make that higher move. So your Bitcoin sellers are going to be looking for short positions anywhere inside this box. Here or here. Yeah, that'll probably do it, folks. It's late in the session now. I wouldn't be putting on any new positions right this very second, but it's still anybody's game. This thing is barely up on the day. It's up 1%. Bitcoin's literally unched on the day. 0 zeros almost, triple zeros. That's unchanged. You got oil up 3, ETH's down a quarter. It's very slow. All right, C-Spire and Smart, yeah, read that. What up? Good morning. What's happening? Non-stopity. Silver entering a buy zone. I like silver higher, but only if the dollar rolls over. You could argue that it is because you're real close to the daily 21, but I mean, it's starting to feel a little bit like exhaustion. But yeah, I mean, it is an a bullish trend, right? You're above the 200, you're above the 21. It needs to hold here. My concern with it is whatever it had going for itself, it has simply lost here. So it needs to hold this. If the dollar rips today, silver's breaking down. This is a pretty aggressive move lower. This doesn't feel like a liquidity run, right? It feels like a breakdown and squeeze starting to happen here. The silver's probably going to be choppy and sideways for a long time. If you're looking for a long-term investment on silver, you should probably try to pick it up cheaper. But it was recovering really nicely. This is still very much a small weekly range, so it could still be viewed as a pullback only. But at what point do you stop viewing it at a pullback is what I would ask. I would definitely want, so it needs to do something simpler to what it did here. If it closes under the 21, I want to see a rebound on the next day. Same thing here. Closes under the 21, I would want to see a rebound here. If you see anything like this, be careful with buying it because it could be getting ready to roll over again. I would argue that, yeah, it's a 618 retest of last week's range. So it could be, it's just not, it's not a trade I would take, but it could be. If it spends many hours trading in this area, you could try a trade on it like around the Asian session open or something like that. But, I mean, obviously the buyers were trying to buy here early this morning. They have been stopped out. Your sellers are on the right side of the trade. It's a pretty aggressive pullback. It's far more aggressive than anything you did on Wednesday and Thursday of last week. You see what I'm saying? Like, This is what a pullback looks like. This is more momentous. Momentous. It's got a lot more oomph behind it, if you will. So I'd be very cautious. I don't like, so like when I'm trying to pick a reversal, which is what you would, it's right, you're trying to do a pullback buy. So it isn't calling a reversal. The trend is more up than it is down on the 4 hour here. So do what I said, what I would be looking for on Bitcoin. Look for silver to put in a sideways range right here. If it can do this, just under this purple line, right? So if it can do this under this purple line, then I would be looking to try to buy it right here, at least by putting on this trade. You know it's not looking for another one of these candles because it's chopping. So that's point number one. And then point number two, it'd be so easy to mitigate risk here because you could just be long at the 786, because if you're wrong here, it'll be another aggressive move lower. So you'll eat a stop and you'd be like, okay, fine. I'll try to pick it up at 70 or something, right? But if this happens, then it puts the probabilities of, yeah, it's probably going to bounce at least in a little better, right? So you don't want to buy it just yet, because this candle is going to close in 33 minutes. 33 minutes. You're going to get a new candle open. If it pushes up to like here and then fails and gives you this look like this, you wouldn't even want to buy it, would you? No, you wouldn't. So you can wait and see if what I said might happen. See if it builds in a range under the 200. That would be your best bet on taking a long position at these prices with silver. So like right here is a perfect example of what I'm talking about, only inverted. So let's invert the chart real quick so you can see exactly what I'm talking about. Because it has momentum, you might want to wait. I want to see a range form just under the 200. See how this is range bound here? You put in this one more trending candle with a wick low. This candle trades inside of that range. Same for this candle. They just trade sideways, literally, for like 16, 20 hours. And then it breaks out of the box to the upside. That's when you're going to want to get long. But instead of buying the break out of the box up here, you can buy the bottom side of the box. So anywhere in here, you can mitigate your risk right there. And then if you're right, it'll break back above the 200 and then it'll go. So that's what you're looking for. And you have an opportunity for this exact thing to play out right now. That's the only way that I would have a bullish bias on silver here, is if you get something similar to that. So let the breakdown happen, let it go, be patient, and then tomorrow it should trade sideways somewhere just under this purple line. then you can look to buy near the bottom of the candle range. Buy it, put a stop somewhere, so that way if it breaks down, you'll get stopped out. And it will be a very small loss. Your account will be good, right? You're not looking to get rich on one trade. It's just a single trade. Your account will be golden, and then you'll be able to try to get it lower. Or I would argue if it breaks down and starts to trend, that we're probably heading higher on the dollar, which means lower on silver. I think silver and gold are done. In my opinion, the run that they had. So you can't see the run on this because this is a perpetual swap. XAG. I'll just go to the normal. There's just not enough data on this, but like these things ran hard for years. Well, silver didn't really. Silver really didn't get going until 2025, but that was a big get going. Like, you damn near tripled in price. So I would say you're going to spend a lot of time in this range. The range is huge. The range is huge. But in terms of saying, like, I want to buy silver and gold right now today because I think they're going to break out and go to all-time highs and beyond before the end of the year. No, I don't think that's right. I think that's wrong. I think that's a blow off top right there. That's the best example of a blow off top that I've ever seen. And blow off tops are usually cycle peaks, not... You usually don't see continuation from a blow off top until you hit oversold again on the RSI. That's what I'm talking about. You know what I mean? Like, this thing is done. It's toast. In my opinion, I could be wrong, but in my opinion, yeah, it's probably toast. I think those buyers will show back up here when this indicator finally gets, does this thing. Like, this is when you're going to be wanting to buy silver, wherever it is. A lot of chop, a lot of sideways, a lot of trading is going to happen on silver for the next couple of years, most likely. But hey, if you have an indicator or if you have info into central bank buying, if their aggressive buying is still taking place on gold and silver, then maybe it doesn't hit oversold. Then maybe it is going higher. But that looks like a blow off top to me. I mean, damn. You took out like 6 weeks of price action in 2 weeks there. And I mean lows. You took out many weeks of lows here. In just 2. Boom, boom. That's blow-offy. Generally, when you see that type of shit, it's gonna be sideways for a long, long time. This isn't even a blow-off, but look how long, once you had this rapid advance higher, it was just range-bound, choppy, sideways to down. Here you peaked out, right? Sideways, breakdown. Boom. There's your oversold. That's when you're going to be a buyer again on silver. Long term. This is the most overbought it ever got in history. Like, in history. It's the most overbought it's ever been. Ever, ever, ever. So be a buyer down here for the longer term. That's where I will start picking up more silver and gold. So I started selling my coins and stuff once it started to rip above highs. That's when I'm taking profits. That's how I've been investing forever. I buy oversold shit and try to sell it when it hits overbought. You just got to be patient. If you can be patient, just looking at the RSI is the only indicator you're ever going to need, especially with assets that go up over time in value. Anything that essentially the dollar is going to be used to buy, if it's a good asset, right, it appreciates over time because the US government depreciates the dollar. That's why the asset value increases over time. It could hold here. It is the midpoint of the RSI. But here on the next week or two, we think the dollar might be looking to go up and fill that gap. That's what we're concerned about on the near term. We're concerned about this gap. That's a pretty big gap. So we think the dollar could come back up to like 99.36, maybe a little lower, 99.33. Like that would be a midpoint gap fill. Could be good enough. We'll see. But it broke down yesterday and then it came right back. I didn't like that. That right there was a major red flag to me. That's why this morning I posted that I was looking for the short on Farcoin early this morning. I wanted to make sure my community knew what I was looking for before we ever even, way before we got live. Right here. I don't like that the dollar is back. When I say is back, I just simply meant back to the yearly opening range. I think I'm going to short Farcoin again today. It's still at 3-day res. If it can fail here, I will short it. It's the same level that we're currently setting at, or were setting at earlier. That's this level. So I knew at 6 o'clock this morning that I wanted to short Farcoin at 2061. And usually, or not all the time, but a lot of the times, when I can look at an asset and within 5 seconds instantly know what I want to do with it, they work out. They work out often. It was a very simple scenario. And that's going against all of my other rules. It's just based on what the dollar's doing, based on how it's trading and how it has been trading. So, yeah. Unfortunately, that's going to put sell-side pressure on gold and silver, too. As gold and silver trade against the dollar. Here's the gold chart right now. It is also pulling back today. You also took out yesterday's low. Yeah, gold is a bearish engulfing candle. At resistance. Those are pretty decent sell signals. We'll see if it gets any continuation, but you took out yesterday's high and you rejected. Right there would have been where I'd have been looking for the short on gold today. If I was looking for the short on gold today. I wouldn't have been able to take it because that happened at literally at 8 o'clock p.m. last night. You would have had to get short gold. But it's a trending move now. You've got literally, this is Monday, Tuesday. You made a higher high, now a lower low. So it's a bearish engulfing. It kind of feels like the weekly range expansion is starting to happen now and it's heading lower. It could stop here, but just be careful. Make sure your risk is mitigated. Watch the 4-hour 200. Anyways, all right. Nonstop also said, I'm short on gold. That's exactly what I wanted to see on. Oh, yeah. Well, yeah. So you're short gold and just looking for a potential long on silver. I get it. Okay, yeah. No, you got time. You've got time. Just keep your short. Don't do nothing on silver until it bases out under that 200, if it even does that. Then so when that happens, you'll be able to say, okay, now I want to close the gold long and buy silver, right? Just for the scalp up if it bases out. If it doesn't, just keep your short on. Yeah, good stuff, man. That's good trading. I like it. Minecraft trading, the TRY. Yeah, that is a very ugly symbol. But that's what's happening to everybody's currency eventually. That's why Bitcoin is like probably never going to zero. Bitcoin selling pressure, it did happen. Yep. DXY inverse chart breaking out. Yeah, DXY right now is working on a breakout for sure. You also have the USD/JPY working on a breakout as well. Euro's testing the year open. It could be a couple days before we get like real conclusive data from this. But as of right now, I would say that gap is probably pulling price to it. The MOVE index looks primed. Oh, Lunar, good, you're here. I want to specifically tell you, I don't know if you caught the beginning of this video, but we just specifically discussed banks, talking about the credit results of the 4 largest banks to see how the credit cycle is actually doing. We know that private credit is getting hit because of software. It's not a credit issue. They're overexposed to software. That's what's causing that scenario. We looked at the consumer and commercial non-accruing loans, the seriously delinquent ones, and that, 90 plus days. Banks, they no longer report interest income from those kind of loans. It's a broad, those banks also have the broadest credit exposure, and the results are a concurrent indicator. And as the banks go, so go the economy. So with that being said, there is no massive downtrend on that indicator, right? I showed the picture earlier this morning, but let's just real quick before we wrap this up, go look at the banks, as I do have some banks here. I have a watch list. Let's look at JP Morgan, for instance. Let's go out to the weekly. So this way nobody can be like saying I'm crazy, right? You're literally at all-time highs on JP Morgan or close to them. And all these guys reported earnings last week. Schwab looks good. Could it be breaking down? Maybe. Schwab is more of a trading firm, more of an investment firm than it is an actual loan-making bank. Wells Fargo, PNC, Bank of America, those are all your loans. PNC, almost fresh all-time highs. BAC, almost fresh all-time highs. Truist, highs. They all look fine. There's no underlying issue there in terms of a credit crisis. But just keep that in mind. And then MOVE specifically tracks bond market option volatility. Yeah, it's pulling back. That's a good sign. You want to see this heading lower for sure. What are bonds doing today? 30 years up, but it's not up massively. Looks like it wants to break out. This is an issue. It really is. You can't really cut interest rates while, this is trending higher. So obviously the Fed wants to see this roll over. The 30-year bond is looking rough here. The TLT looks rough. Like, if you start to see a serious breakdown on this is going to be very, very bad. That means a print is coming. So you would want to be long stocks, gold, Bitcoin. You want to be long anything that appreciates against a depreciating dollar. And you definitely would not want to be long this stuff. So just keep it on watch. Obviously the Fed wants to see the long yield. The near-term yield will roll over eventually. This is what they have more control over, right? The very near term. That's what they have control over. So they don't have any control over the long term. 10-year, 20-year, 30-year yields. All of them look rough. They all look rough. The Fed wants to see this roll over. But only time will tell what it's going to do. And then lastly, let's go look at the BOJ. Yeah, this thing could be getting ready to break down. JGB 30-year yields, ugh. Yeah, things are looking rough, but a print coming would be bullish stocks. I mean, they're positioned heavy for the longs. We think Bitcoin will start rallying once the squeeze is beginning. Bitcoin will probably start rallying aggressively due to just there being no supply. But right now, Bitcoin could be looking for, near-term lower. We'll see. All right. I think they done too. They're very hesitant too long. And do you see gold dropping to 4,200? And that's the last question. All right. Yeah, let's see. Longer term, can gold get back to 4,200? Well, first and foremost, gold. Okay, so if you look at James Stanley does a really good job of explaining this. And I don't have my chart set up for that, but he has one of his set up for that, where you can really see how gold does chop in and around these $100 figure points. And then let's go 46 because we got 47. Let's get rid of all of these different colored lines real quick. And then 45 is right here. So that's pretty good. So you can see how these $100 spots on gold do affect pivots. You're probably not going to see gold do anything like this unless there's some kind of bad news or something. This was during the blow off top, right? This was a very volatile, this kind of price action isn't gonna happen the longer out in time we go. You'll see some big down days, but it won't be like bam, bam, bam. So I figure you'll see this kind of price action, right? But on the way lower. So is it possible we get back down to 42? Yeah, but it isn't going to be a straight line down to that. Longer term, yeah, it's possible. But you're probably going to see it take a long ass time as you bounce around these things, right? Maybe something like this. You get what I'm saying? It's going to take a long time, but it could. So if you're looking for scalps, you can watch the $100 figures all the way down and look to position around them. We use objective levels. We don't use these. We like price to set the range for us. And then once price sets that range, we look to position ourselves in and around swing highs and swing lows. And we do pretty good doing that. I don't think it goes straight back down to 4,200. I think if the institutions are positioning for a print specifically, like if they're starting to get positioned for a print, then my opinion is they ultimately do fade the dollar rally. You would need the dollar to rally probably much higher than that gap to get gold down to 4,200. But I don't think gold goes to 4,200 if a print is coming. It's an appreciating asset. So, I mean, it's possible, but that's a long way away target. A long way away. 4,200 is just under the yearly opening range. I wouldn't doubt it if you see a bunch of candles this size on gold for the next several months. Gold and silver are generally not big moving assets. They are generally really small moving assets. Like silver's average move is like 0.5% per day. It's because they exploded to the upside, volatility, right? The volatility on both those products caused big price ranges. Those price ranges are going to shrink over time. The more and more slowly and more time goes by, less people are trading it. People will get tired of retail has a very short time frame whenever they start investing in things like that. Generally, things move pretty slow when volatility's down. So we'll see what's going to happen, but I'm pretty sure things are going to be right back to bullish in no time. It's just going to require some good news in the Middle East, I think. But anyways, we'll wrap it up there. Thank you all for being here. As always, make sure you guys trade safe. Make sure you guys trade smart. Make sure you... Oh, wait. Happy trading. I already said all that. We'll see you guys Thursday morning. Thanks.